Welcome back, YouTube. In this video, I'm going to go over another common question that I have, and that's why did Dogecoin consolidate? Why did it fall prior to a lot of the other coins? But why did it also stop within the range that it was supposed to? And this is kind of like a continuation from the video that I made yesterday, and we're going to go a little bit more in depth. And I'm also going to do some TA as far as where Dogecoin is at the moment at the end of the video. If you read the title to the video, it's called Dogecoin Wasn't Expected, or they didn't expect Dogecoin, the anomaly. And so pretty much typically what happens, if you're familiar with my wealth flow chart, I broke down as far as for how the money flows into the market, the different stages of retail, and how they pull liquidity or take profits from the market and repeat. But overall, you're on a incline going up, so that over the course of a few cycles, you're ultimately setting higher lows. Completely normal. It's also completely normal for crypto to hit an all-time high and then do that 50 to 80% correction. Nothing about that is abnormal. Well, last year was literally the year of the anomaly, especially with GameStop, AMC's run up. Then, of course, we have Dogecoin's run, which sparked literally the crypto expansion that we have today. And so many retailers being involved in crypto. Last year, we had the shortest bear market in the history of the stock market. And I believe this was in part to really mostly because of the amount of retailers that came running into the investment area. And I think that it caught a lot of the institutions off guard, and they did not want to lose the control over certain assets at that time. Typically, if they take the corrections without necessarily taking retail down with them, then that means that retail has full capital coming into a bear market that they aren't necessarily invested into. And they're going to be able to swoop up these cryptos, these stocks at record lows, and literally have a very strong holding percentage in some of these assets. And at the time, we didn't know how strong the retail sector was going to come into the market. We just knew that day over day, month over month, Robinhood was the #1 app in the App Store. And we've seen just record numbers overall, just by the hundreds of thousands over month, as far as for people signing up. So I'm sure that sparked panic overall as far as for the amount of retailers coming in and just how much money were they going to put in some of these assets. I believe that they would have taken profits similar to what they're going to do last year, but they kind of had to come back in just because of the opportunity that presented itself there with all this new money in the arenas and also not losing control of some of these assets. Typically, hedge funds, the institutions, they've already chosen their favorite child. And that's going to be Bitcoin. Bitcoin is literally the Coca-Cola of the crypto market. So you know how with Coca-Cola, when you say soda, you think of Coke, and they've branded that. They can be substituted, soda and Coke, for those words can be substituted for each other, and that's similar to what Bitcoin is of the crypto market. It's the face of the crypto market. That is the chosen one. And when you have Bitcoin is the market leader, so typically when Bitcoin rises, the market rises. When it falls, the market falls. And that's not necessarily saying that traders are tracking Bitcoin and making these moves. It's just that when you are, especially the top 10, they have an allocation that they put into their crypto portfolio. So if we're going to invest $1 billion overall, they'll say, okay, we're going to put 300 million into, this is just an example, we're going to put 300 million into Bitcoin, 200 million into Ethereum, 100 million into Cardano, Polkadot, whatever. And that's why you start seeing these charts do these similar patterns all simultaneously. That's not a coincidence. So when we have these coins doing this, they typically already have their system kind of planned out. Dogecoin came in and literally shook up everything and brought in all this new money. And with the revenue coming in, it was gaining fast, not only in popularity, but also running up the charts as far as for being the most held cryptocurrency overall. So institutions typically at that point, they will get involved as well, just because you don't know to the extent as far as for how far this coin is going to run. And also, if you can typically jump in and pump the coin even more, you're going to attract additional investors and be able to make a bigger profit. So I'm laying the groundwork for my conclusion here. So now we have institutions inside of Dogecoin, and we also have a record amount of retail investors. Again, 65% of all people who are invested in cryptocurrency own some Dogecoin. Massive numbers that we have invested in Dogecoin at this time. So now you have a bunch of people who are short term, who are literally just hoping to go to the moon. They've been, some of them are over leveraged, and they've put a massive amount of money in, and they're hoping that this coin can do again this week what it did last week. At that point, now all you're looking for is really a negative catalyst or something to kind of go against the grain, and that's going to cause panic and fear, or simply even just if the institutions cause a big enough dip, especially if it's like if a coin is literally saturated with inexperienced investors, they're going to panic and start the avalanche effect. Will be going the opposite direction, and I believe that's what happened after the SNL. For those of you that aren't familiar, I talked about this in one of my videos about a month before Elon went on there, warning of a harsh correction and typically the type of things that happen in crypto. So now you got a domino effect of people panicking and institutions taking profit out of this particular coin more aggressively than some of the other ones, because again, Dogecoin was never a part of the plan. So now you have this avalanche effect, but Dogecoin is not just doing a full retracement. It's hitting support levels. It's literally having, and we're going to go over the charts here at the end of in a moment, but it's hitting support levels. It's having some resistance on the way down. Why? Because it's become common theory throughout the community to buy the dip, and they're buying the dip at 5% off, 6% off, 2% off, and DCAs aren't moving, but they're burning up their available cash. So now we have this theory here of these people locked in with these really high DCAs. Now, don't get me wrong, coin count matters the most in the long term, but you have to be strategic about your entries just to give yourself that the options, the leverage that you need to maneuver. So as we all know, Dogecoin continues to go down as far as these new coins come out and the market starts expanding from all the new retail investors in there, and people get shiny object syndrome, and the money that's in Dogecoin literally starts to disperse and starts going to all these other coins that are hoping to duplicate Dogecoin's success and generate those kinds of returns. And massive rug pulls are everywhere. And people are just literally just running from one coin to the other. And as that money comes out, time goes by, people panic, people are not familiar with cycles, and Dogecoin further consolidates. But Dogecoin maintained the levels that it needed to, that it has ultimately, or that has ultimately determined like the health of a coin when it goes through different cycles, and that's that 50 to 80% retracement. Dogecoin did not blow past any of its support lines, and it did not over consolidate to a point where that was alarming to do like a full retracement. Dogecoin acted within all parameters of normality in the crypto market. And I went over this yesterday in great detail as far as to why I'm not worried about Dogecoin, so I'm not going to make that case here. But Dogecoin, in a long story short, Dogecoin did everything that it was supposed to. Now it's no longer an isolated event. Now we have a catalyst for the entire crypto market, and it's come time to fully take profits out of the market for some of the coming liquidity issues and stuff like that we're going to have and over the next couple of months. So now the market is further consolidating, and we see some of the other coins, especially like a Bitcoin, we see it bouncing and pretty much doing that fight, similar to something like what Dogecoin did, as far as for the people saying that, or denial of what's going on and saying that, oh, it's going to run and do an all-time high, it's not going to correct anymore. And then we'll see like these little bumps and rallies and these little runs, but ultimately it'll keep retracing, and they'll burn up their cash, and then it will consolidate to where it needs to before it runs to an all-time high again. But we see that Dogecoin is still holding strong. It's holding at that 14 to 12 range, 14 being the ultimately like the support level that it would have had previously, but 12% historically is that range. At the extreme end of that range, that corrections happen and Dogecoin hits those ranges and gets strong rejections there each time and rallies up to around 14 or so, where it likes to hang out. Institutions weren't necessarily long on Dogecoin at that time, but they realized the opportunities that were there. And we have to understand that all the money that is in these cryptos or in these stocks is not our money. And I think that a lot of investors forget that, and they think that this is all us in the market, when you're forgetting that there are really big players in there. And it's not just whales. There are, I don't know what you, a whale is what I would call someone with a large position, like an individual. I don't know what you would call an institution, but I feel like a whale is not justifiable. Someone with almost unlimited cash with an already existing large position, they can influence the coin to go either direction. I feel that Dogecoin is really like the disruption to the crypto market, which is why we see shorts come out in massive numbers anytime Dogecoin gets over 20 cents, because they do not want Dogecoin to succeed. I'll save that for a separate video, and we're going to do some TA here. But this is why you see the aggressiveness when Dogecoin gets on these rallies, like you did with the Tesla merch announcement. Dogecoin was the anomaly. That's why Dogecoin fell first. That's why the institutions pulled money out of it, because they were never long in it, and they do not want Dogecoin to, because Dogecoin is not part of the plan. Dogecoin is literally, I guess you can say, like the people's coin. That was the sentiment going around last year. They do not want Dogecoin to be around. So when you see, and you had a lot of famous people, a lot of rich people come out and say, hey, we're shorting Doge, Doge is dead, we hate it, blah, blah, blah. Bitcoin's where it's at. That is all by design. You can believe that these people do not want, the Doge is the anomaly, and they do not want Doge to fulfill what we're saying it's going to do as far as for being like the number one method of payment. I won't get too far off topic. I don't want to, I'll save that for another video. We're going to do some TA here so we just can touch base as far as where Dogecoin is right now and what we can expect over the next few weeks. Okay, so as I said, I don't expect anything major until we get the numbers from the Fed as far as for like interest rate hikes, how many they're going to be, how aggressive they're going to be. I don't expect anything major for the next few weeks. And Dogecoin is literally doing what we talked about a few months ago, which is pretty much trend sideways, hold up these support lines until we get around like late February. And here we have, this can go like March 3rd, but we did come up and almost retest it, but I'm not expecting any major moves unless we have like a major announcement coming up. And I believe our next big one is going to be sometime next month for AMC, but we also know that March 16th, which is here, let me see, because I do believe that this line won't be respected after we get here around, what is this, the 3rd, 4th of March. So I believe that this won't be respected. So I don't think that we're going to hit here and get a break up or down. I think that we're just going to come right through. But I'm just going to put a little a little mark here. Excuse me, where's the 16th? Right here. So right where that dot is, you're going to, this is where I believe that we're going to get our break, where we can come down and test that 12 cents line, or if it's just something crazy and they come out and say panic, well, not panic, but they come out and say, oh my God, inflation is a runaway train. We need 0.5% several times this year to kind of get this thing under control. I don't think that that's going to be the case, but if they do that, that's where we'll get that break to the downside or to the upside at that particular time. But I think that we're just going to trend sideways in the meantime here, and at best we'll come down and retest some of these 12 cents lines, unless we get something really negative, like some Russia-Ukraine crazy type stuff. Then we may go down and test some of those lower levels. But as of right now, I don't see a catalyst for us to break below that just yet. I won't touch on Bitcoin in this video. I'll probably save it for like the video tomorrow. We'll touch base on it. I'm expecting a further breakdown, obviously, for a number of reasons, but we'll save that for tomorrow's video. I don't want to make this video too long. If you found value in this video, like it, share it, subscribe to the channel if you want to hear more from me. Also, don't forget about BlockFi. If you have an account with them, I have a link in the description. You can open an account with them and get up to $250, and that's included in Bitcoin and Ethereum as well. So with that being said, I appreciate all of you. Thank you, and until next time.